All right, so after 5 weeks of gains for the Dow, stocks stumbling a bit today. So where's our next guest telling his clients to invest? Mark Lamkin is the CEO of Lamkin Wealth Management, which is $225 million of assets under management. There he is. Mark, welcome to you. Great to have you here today. All right, so what are you doing today? What are you doing with your own investments or telling clients to do? Because we have the big run up here in the month of October, and we're really consolidating a bit today.
We are. You know, this market recovery is not going to be in a straight line, so this is somewhat to be expected today. I still think there's good values out there. The big deals, the European quarantined package, as I'm calling it right now. And with that risk behind us, I think it's time to be putting money back to work. So in our models, we're buying heavily today. We're still only about 50 to 60% invested, but we're still buying that small cap area, mid cap area. I think we benefit from a strong consumer, just as Nike was talking about. And I think merger and acquisition picks up the second half of this year. If the super committee comes in with pretty good results, as I'm expecting, we could get an even better Santa Claus rally coming.
Mark, what do you mean by pretty good results? What would you consider pretty good results? And is there any way that they could, I mean, I guess I could almost say any result would be a surprise to the upside from the super committee.
Well, the good news is it's not a European-type deal in the super committee. It's not going to cause a capital freeze or a Lehman-style event. I think the whisper number is $3 to $4 trillion. And I do think that these men and women on both sides of the aisle realize that it's a tipping point. And I do think they're going to be pushed for $2, $3, $4 trillion. And I think that takes Greece and the physical austerity here off the table, or as far as the debt issues. And I think I've been saying all year, 8, 9% single-digit gains on the Dow and S&P, and I think we'll finish strong this year if that happens.
You're talking about Washington. We've got all kinds of economic data. We're watching Japan and Europe and all of these other fundamentals, but we're also watching technical levels. So tell me what goes into your outlook. I mean, are you looking more at the fundamentals and the events influencing markets or the numbers themselves? Because we did also cross some key technical levels this last week.
You know, we do use technical analysis in the office. We look at moving averages. We look at trend lines, and quite frankly, short interest. But I think you also have to look at the fundamentals here. Bottom line is, when you look at the earnings that are coming in, 75% of the companies in the S&P 500 have beat earnings. Not only have they beat, it's 15% year-over-year growth, and they're sitting with $1 trillion in cash. So I think that gives you a nice backdrop to prevent huge losses. But that's why we're tipping back into the market right now. Trends are strengthening. Insiders are starting to buy a little bit. Big block share trades above moving the averages set the tone for very good trends for the remainder of this year, and that's why we're buying in our models right now.
You know, previously, look at the latter part of the summer after we had that big sell-off at the end of July, early August. A lot of people were saying, hey, go for some safety stocks, blue chips, pay a nice dividend. You think you could even take that further and play more of the small cap and mid cap names through some ETFs, don't you?
I do. I think we're going to benefit from that mergers and acquisition. And let's face it, we got resolution in Europe, not solution. And what I mean by that is I don't want to own a whole lot of companies that have European exposure, because it is going to be mired in recession or slow growth over there. Your small and mid-cap names right now, they benefit from U.S. consumers. We get any type of good results from that super committee. Broad-based market gains here on that early Santa Claus rally. And let's face it, small and mid-cap companies are acquisition targets, and they're growing sales at a much quicker pace than the S&P 500. I'm a buyer right here, and I think viewers should be too.
All right, September 27th, Mark, your last visit with us, you recommended the SOX, the semiconductor index. Well, since the 27th, the ETF is up 8.38%. Not a bad performance there. Would you stick with it?
Right.
Or put fresh capital there?
I am sticking with it, and I am adding capital to it in our markets right now, and I'll tell you why. Any type of stock that helps consumers, or specifically businesses, increase productivity, increase sales, I think those are the types of stocks that you want to own right now. So I'm adding to that technology. And in a sideways market, on September 27th on air, we talked about maybe that JNK or BKLN,
right,
the junk box, the high yield and the senior secured. We've picked up 5–6% since then, so I think the easy money's been made there. But for dividend investors, we're still committing capital in there, and I still think they're good buys.
Mark, I just have a few seconds. What do you think about everybody, how nervous investors are in terms of waiting for that one sign to sell? We got jobs data coming out on Friday. What are you expecting?
You know, I think if we're expecting about 90,000 jobs, if it's plus or minus 10, 15,000, I think we're going to have a pretty muted reaction. If it's a horrible jobs data, I think you got to be looking to sell and take some take some profits there. Flip side of that, if it gets to the upside, this job's importance is one of the most important of my career, and I'll be watching closely.
Wow.
You and millions of other people, that's for sure, Mark.
Right?
Thank you.
Thanks, Mark. We appreciate it.
Thank you so much.